Barrel Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for Tuesday the 16th of the 2nd, 2021. The time is 0455 GMT, Asian session coming to a close, European session firing up, and our lunchtime is the North American US session. Right, I've written it up so we can get cracking. Monday then, which was yesterday, the 15th, we had a negative opposed driver in the yen at minus 234. Front and back door flows then, mainly going into the pound at plus 197, next into the euro at plus 46, and the dollar was the rock at minus 9. Activity plus 243, so reasonable activity. Intra-week then, this is from Monday, first day of the week open to about 15 minutes ago. Again, we've got a negative opposed driver in the yen, minus 379. Front and back door flows going mainly into the pound as before, plus 332. Next the euro plus 89, and the dollar at minus 42 is the rock. Activity plus or minus 421 for the week so far. Intraday then, today, what's happened in the Asian session? Basically we've got the same situation. We've got opposed negative driver in the yen, minus 146. Front and back door flows mainly going into the pound, plus 143. Next the euro plus 43, and the dollar was minus 37, the negative rock, on activity plus or minus 183. Now, what's going to knock this around then? Well, yesterday or this morning early, depends where you are, AUD had their minutes. Basically, monetary support, they're saying is significant monetary support is needed, but they're starting to get twitchy about asset prices, which is code for the house price. The housing market is overheating. Excuse me. So that's where they are. Remember that the AUD data cycle is showing significant signs of improvement if you look at our data cycle model videos. Right, so right, what have we got? We've got increased geopolitical risk still, rocket attacks but in the oil. We've got today, Tuesday, we've got Euro GDP tier 1. Wednesday, tomorrow, we've got pound CPI, US retail sales and CAD CPI, and Thursday and Friday we've got tier 1 AUD data. So that boxes us in. Right, let's just get a cloth and we'll be there. Let's just rub this out and look at what's going on in the wider market and in the flows. So if we look at the flows for the complexes, so let's have a look then. So we've got, if you look at the euro as a complex, overall it's weak except against the yen and the dollar. Okay, so the euro's weak except against the yen and dollar, which are even weaker. Well, we've got the yen. The yen is weak across the board. The whole complex, the whole 7 FX pairs are yen weak. Right, what else have we got? We got the pound. The pound is strong except against the NZD. Okay, so the pound is beating everything in the pairs apart from against the NZD, the New Zealand dollar. The Swiss franc then weak, is generally weak except against the yen. So the Swiss is sold off apart from the yen is even weaker, so it's relatively strong against that. The CAD, what's the CAD doing? The CAD is strong except except against the pound, AUD and NZD. Okay, AUD then, what's that up to? AUD is strong, except against the pound and the NZD. The NZD as a complex, as a whole, is strong across the board, and the dollar is weak apart from against the yen, which is even weaker. So that gives you an idea of what's going on a little bit in the complexes. So you've got an extreme position on the yen. You've got there's no yen strength at all across the complexes. Excuse me. There's no yen New Zealand weakness. So New Zealand is fully pumped on the up. Yen is fully pumped on the down, and then you've got the euro's pretty weak, and so on. So that's useful information. Let's get rid of that then. Right. So what's been happening in the wider market? So gold has basically dirged and is about there. So nothing exciting happening with gold. Oil is pretty much fully pumped. Wall Street, tech and the S&P, they're fully pumped, and the US 10-year 10-year, not yen. Basically, the US 10-year is looking like that with a slight improvement. So the price of the US 10-year has fallen. Yields are rising, and it's just off. It's near a double bottom floor. The US 10-year, and finally copper. Copper is pretty much going to the moon like equities. So that's where we are. Right. So let's just quickly make some assessments of what's going on. Right. If you look at the flows, then you've got constant flows here. We've got the same batting order. On the negative, you've got yen, dollar, euro, and positive euro, pound. This is the same no matter what time frame you're looking at. Intraday, yesterday, or intra-week, etc. So we've got very strong, consistent flows, and as we can see, they're out of the yen due to the equity transmission. They're into the pound because they've got somewhere to go. They need somewhere to go. The euro is mixed and the dollar is mixed. So what's actually going to change these flows, and when are they likely to change? That's the key question, isn't it? Really. Well. What have we got? So today we've got Euro GDP, and the Euro is the mixed one. And Wednesday, which is tomorrow, we've got GBP CPI, US retail sales, and the CAD CPI. So I would suggest they're likely to continue with this pattern today. So you're going to see yen weakness, pound strength, all the whole cabal there. But they're going to start thinking about data risk tomorrow. So that's our take. If you want to trade, I would suggest going with the flow, going with these flows today, and then maybe really seriously thinking about tops and bottoms for tomorrow. So hope that was useful. See you tomorrow for the daily briefing. Thank you.